Am I sharing the right screen, Alicia?
Yes.
Okay. Is it advancing?
Yes.
Okay.
Renita, I'm so sorry. If you can pass that back so I can do the live stream first, I'm so
Oh.
sorry.
Okay. Let's see.
You just right click on my name.
Make host. Yeah.
Oh, it is good. Says it's live stream. Make sure. Okay, we're good. I'll pass it back.
Okay, Renita, I think we're missing one audit committee member, but we probably can go ahead and start.
Okay. Let me just.
So the first item on our agenda is for the audit committee members. I will note who is present for the purposes of recording the minutes. But if we could I get a motion from one of the audit committee members to approve the March 6 minutes?
So moved.
Second.
Thank you. Minutes are approved. So the next item on the agenda, we have with us today Alicia Barnum and Anita Duncan from Reuben Brown to talk to us about the recent audit that concluded. So I will turn it over to Renita.
Okay. Thank you, Marion. I'm going to screen share the viewpoints document only. That's a summary document. And then we figured we would just have a high level discussion, but we will entertain any questions. Just in the interest of the fact that everything's done and we're submitted and we're already looking forward to fiscal year 24 and what we need to do there to be prepared for the audit. We issued 3 documents. So we issued an independent opinion on the annual comprehensive financial report for the ACFR for fiscal year 23. And we do assist the district with putting that document together and submitting that to the GFOA. In addition, the second report that we issued is the single audit report, which is the audit of federal expenditures. And that's required when you expend more than $750,000 in federal funding. Within the single audit report itself, there are several opinions within there, which gets to be a little bit confusing. But one thing that is included in there is also if we have a management letter, essentially, or any internal control comments, that's included in the single audit report. Okay, so that's the second report that we issued. And then the third report is an examination, if you will, on transportation and attendance. And that is submitted to DESE and is a requirement of DESE. So as your auditors, we issued our reports on March 28th. We submitted the reports to the federal government. So Reuben Brown helps with that submission to the federal government through a clearinghouse portal. That process happened on March 29th. And then management of the district submits the reports to DESE as required. So that's where we are. So we're done and we're submitted. A little bit about the results of the audit. We did issue a clean opinion, although we did have some internal control comments, which we'll talk about that later in the report. As for the ACFR itself, there were no prior period adjustments. There were no changes to accounting policies. However, when we met a couple of months ago and we talked about the audit plan, we said that there was a new accounting standard for governments, GASB 96, related to subscription-based information technology. We did look at that standard as it relates to the district to make sure that there was no material impact. So you won't see any additions for that standard because it was immaterial. And really the crux of that is that the main piece of technology software, there's a cooperative agreement with DESE. So St. Louis Public Schools in itself does not have a contract to use software. They work with DESE through that process, so it does not meet the requirements of GASB 96. There are some estimates within the financial statements. These remain consistent with prior years as we talked about the ACFR. So management has to come up with allowances for uncollectible receivables, uncollectible tax receipts, They have to come up with estimates related to the useful lives of capital assets, as well as commitments and contingencies, the OPEB plan and the pension plan. They have estimates inherently included in them or baked in them by the actuaries. So the district itself doesn't come up with those estimates. Reuben Brown doesn't come up with those estimates, but the actuaries do. And we audit those actuarial estimates based on what we know about other governmental plans and what we know about the requirements for governmental accounting related to pensions and OPEB. And then lastly, there are estimates related to unpaid claims because the district is self-insured, and then also pollution remediation. So again, lots of estimates within the ACFR, but these are consistent with prior years. There are no new estimates. The next section talks about disclosures. These are the most sensitive disclosures. The ACFR is, a couple hundred pages long, if you will. There are many components to it. If you're going to look at a couple of footnotes or be familiar with a couple of footnotes, these are the footnotes that you would probably want to read. The retirement plan typically so note 6 and note 7, the pension plan, and then the OPEB plan, those usually get the most questions and the most attention. So we've listed those here as being sensitive. Again, not new disclosures, but disclosures that have a lot of information. Okay. The next two slides talk about the audit adjustments. And as you guys are aware, I know because you were aware or involved in the process as we were leading up to finalizing the reports, there were some areas that we worked with the district on adjusting to make sure that, number one, was the balance materially correct? And then if it wasn't, did we need to book an adjustment? Or was it something that we could pass on, which is also referred to as an uncorrected misstatement? And there's many reasons for an uncorrected misstatement. Sometimes it's a cost-benefit analysis, the time that it takes to run an entry through, post it in the system, rerun the reports versus the dollar amount is usually one of the most common cost-benefit analysis. But also sometimes you find things that are really errors related to a previous period, but you fix it in the current period. And because you're doing that, you have an uncorrected misstatement because you didn't restate the prior period. But that's okay because we've determined, okay, it's not material and it's okay to run it through the current year. So what you're seeing here in this first paragraph talks about the total for uncorrected misstatements. So these are things as your auditors, we agree that it's okay for the district to basically leave uncorrected or not take it back to a prior period. The total of that amount is shown in detail on the following slide. And it totals up to the $4 million. And I know that that's a large, that may seem like in itself, it's a large number. But when you're looking at the total ACFR balances, it's an immaterial amount. The second paragraph here talks about corrected misstatements. So there are items that we say these are qualitatively or quantitatively material and they need to be adjusted. So management books an adjustment. We run it through the trial balance and then it's included in the ACFR at the adjusted amount. The total of all of those adjustments, I'm not going to show them in this presentation, but they were included within this packet so that you can see all the adjustments that were posted. The main thing that I really want to talk about related to the adjustments is that these ultimately led to what was issued as the management letter, right? So in the single audit report, we have issued a letter that talks about what do we think the district should focus on as it relates to the internal control structure and what should be changed in the immediate term to make sure that the financial statements are materially correct. So we had 3 comments, and I'm just verbally talking about them. I'm not going to pull them up here. They're included in the single audit report. It's uploaded to the clearinghouse. We're actually already talking with management about them and how to move forward and correct them. But the first comment relates to the structure of the department and looking at the finance department, making sure we have the right amount of people, focusing on hiring and using a recruiter, using temp to perm, using everything really that's at the district's disposal to make sure we have the right people in place in the department to handle the volume. All right, so that was the first thing that kind of led to the delay this year in the audit process. The second comment related to reconciling some key balance sheet accounts. So in particular, grants receivable, accounts receivable, there's a lot of activity there. There are a lot of federal grants. Just making sure that when cash comes in the door, we're properly relieving accounts receivable, or we're properly recognizing deferred revenue, and making sure that those account reconciliations are prioritized. That's the second comment that we issued. The third comment related in particular to capital assets. So again, it's another area that's, there's a lot of volume, high dollar amount, lots of schools that are idle or held for sale. And just making sure that we're inventorying our fixed assets and capital assets, because really they're funded in most part by federal money, and it's a requirement. So when you look at the adjustments and then you look at the internal control comments, you can really marry those things together and say, okay, the auditors had these adjustments, and that's what led to the internal control comments. And then also management has included a response to those comments in the single audit report, as that is required. There were no other matters that we needed to report on. So if there were any difficulties or any consultations outside of our advice to the district, that would be listed here. You know, really, as we talked about before, lots of turnover and loss in historical knowledge and information about the account reconciliations, and then the delay in the audit. But again, all submitted and done as of March 29th.
Renita, I have a question about, can you give us kind of a broad overview or a summary of management's responses to the issues you raised?
I can paraphrase, and then I think I saw Ms. Banks on if you wanted to, because I don't want to pull the report up necessarily, but Ms. Banks, if you have anything to add, I think the main thing that I would say is that management is in agreement with the comments. So that's the first step, right? Is does management agree with the auditor's assessment about what's reality? And they do. And I would say that they are in the process of hiring, looking at the structure of the department, figuring out if they've got the right people doing the right tasks, and trying to get people there and employed, and looking at pay structures and if they're paying market rates. I did talk with the superintendent and Ms. Banks yesterday. I think it was yesterday. So I know that that is underway. And then as it relates to the other two comments, I kind of grouped them together because, the first one relates to reconciliations and the other relates to reconciling capital assets. So they're both accounting closing procedures. I would say that those are top of mind for management, and we've made sure that they know that those are very important account balances, that if you're going to have an error or a misstatement, it's going to be in those areas. And then also related to that, I know Alicia has been in talks already with Charles Ellis, maybe also Armando, just in recent days about, okay, what can we do to make this reconciliation better? Who should be looking at it? What are the key things that you look at as auditors when you're looking at this schedule that we can look at? So hopefully that answers your question. But as far as the formal response, that's in the report that was circulated.
That is helpful. Thank you.
Okay.
Renita, you're specifically referring to the single audit report contains the management responses.
Yes.
Okay.
The corrective action plan. Yes.
Thank you.
You're welcome. Okay. Alicia's going to talk for a couple of slides about some of the highlights from fiscal year 23. We know that we're well into 24, so we don't want to, spend a lot of time on that. And then we will answer any further questions or comments that you have after that.
Thank you, Anita. So this first slide just goes over the general operating funds. Now, please keep in mind, this only includes the general, the teachers, and the building fund. So it will look a little different compared to the following slides. So overall, operating revenues increased by about 27 million this year. Operating expenses increased by about 26 million. Net other financing sources and uses increased by about 2.4 million. Now that other financing sources and uses, this is primarily items such as transfers in and out of different funds. It also includes any proceeds from any sale of capital assets, as well as proceeds from debt issuance, which did take place this year. The reason it increased this year specifically is due to transfers between the general fund and the grant fund. There was some write-off of some federal grants receivable, and that, in order to get it all cleaned up, included a transfer between those two funds. So because you're not seeing the grants fund side of it within this, I wanted to point that out. And then the net change in fund balance increased by about 3.6 million. Renita, if we could go to the next slide. This is that GOF unassigned fund balance, which increased by about 35 million, and that's primarily driven by an increase in overall revenues this year. If we can go to the next slide, that will go over what caused our increases in revenue. Thank you. So local and county increased by about 6 million this year. That's primarily driven by interest income. So because the district had a bond issuance this year, a lot of those proceeds were invested. And they also switched up some of their investments, which caused a significant increase in interest income compared to prior year. And just market performance was better this year compared to prior year. State revenue increased by about 7.6 million. That's primarily due to more state revenue covering some transportation costs, which also increased this year. And then federal revenue, you can see bumped up quite a bit, about 78.3 million. That's primarily due to COVID-related funding. So the district received additional ESSER funding as well as the connectivity grant that they had received last year. If we can move on to the next slide.
Yeah, one thing to note, and we talked about this yesterday on the call with the superintendent, is that influx of federal funding and that ESSER funding, and really the district continues to work hard to deploy those funds, which, as you know, is not as easy as it sounds. But really, there are no concerns about the financial health of the district. The federal funding is strong, and also the proceeds from the bond issuance as well.
So on this next slide, you'll see that overall expenditures increased this year. There's really two big drivers for the increases in each one of these categories. The first is that salaries increased, which caused most of these categories to individually increase. And then based on that federal funding, the district invested quite a bit of money into individual schools, such as furniture and equipment. And with the revenue from the federal funds going up, that also caused those expenditures to go up. So if we could switch to the next slide. So actually, this concludes my presentation within the viewpoints, but I did want to touch briefly on the single audit. So as you're aware, we did perform a single audit this year, and we audited two different programs. That was the CRISA, the Elementary and Secondary School Emergency Relief Fund, and Carl Perkins. So out of a CFA, which is the Schedule of Federal Expenditures of Awards, that of about 142 million total, we audited about 87 million of that. So in addition to the findings that Renita had mentioned over the financial statement audit, there was also a significant deficiency noted relating to the single audit itself. This had to do with property and equipment. So as we mentioned, with the district trying to kind of clean up capital assets, we also noted that there were not physical inventories of their full federal population of property and equipment taking place at least every 2 years. So anytime you purchase property and equipment with federal funds, they have very specific requirements. So you have to have a physical inventory, you have to tag them, you have to keep track of them a little more closely compared to other assets that may not be purchased with federal funds. So we did note that that physical inventory had not taken place. The district did agree with that, and just like what Renita had mentioned before, they are going to try to take advantage of some resources in the future, possibly pulling in an outside firm to do a physical inventory, so this finding will not be repeated. Now, with that, does anybody have any questions specifically to the single audit or any of the operations that we went over?
Just to provide some context, I said earlier about the uncorrected misstatements and that total amount being 5 million. Well, you can see if you compare that to the revenue budget for the year, that was 550 million. And then the balance sheet, which is what most of the past adjustments relate to, because they're related to fixed assets or capital assets, that's about $800 million. So that just kind of gives you some context on how we get comfortable with uncorrected misstatements.
I wonder if there's any discussion around how much longer COVID funding, ESSER funding is going to be available as we have moved past the pandemic. Any notions around that?
I think if the district wants to weigh in as well, management, or even Marion, I know you deal with federal funding as well. I think my personal opinion is that I think we'll be auditing COVID funding probably for the next three years. A lot of this ESSER funding runs out as far as the obligation period, calendar 24 and within 2025.
Okay.
I noticed there's ARPA funding too, which I believe has to be spent by 2026, or at least the grants that we received. That was the deadline we were given. And so I'm curious about the reporting requirements for that as well, because those can be quite complex. So given that we've had some seasoned folks leave schools, I guess I'm wondering, and this is really a question for management that we don't necessarily have to discuss here, but I would raise this as a concern that I have, and that's that reporting of those funds, because there are consequences if that is not done timely and not done correctly.
Yes, and thank you for that. And regarding, some of the ARPA funds, ESSER 3 is, for the district, really our last amount of funds. It was about $105 million that we had to spend really in 2 years. And the current year is the last year. We have plans to complete that funding. I know the deadline is like September 2024. But I think if things are encumbered, there may be some extensions, based on some long-term capital assets that may be back ordered. But it has been our plan almost from the beginning is that we would spend down those funds by September 2024, and we are on track to do that. So, but as Renita said, the auditing of all that will go on for a number of years, but we do plan to have those funds spent down.
Also, I don't know if you're asking this as well, Marion, but we also talked, Ms. Banks, about just the importance of putting together the schedule of expenditure of federal awards at the district, and just making sure with changes in roles and transitions that doesn't get overlooked. Because to your point, Marion, it's important that piece is accurate. And we actually do start looking at that on an interim basis and doing some planning in July. So we start that in the summer months.
I was going to ask you about, and I know we're talking about 2023, but believe it or not, we're almost at year end for 2024.
Yes.
So we have some interim testing that's already scheduled to start in May here. So have you guys set a date as to when you'll start interim testing for the 2024 audit?
Yes, we do our interim for the district in July.
Okay, so it'll be in
And-
July.
As of right now, we're still planning to be on track for what we normally do and do that work in July. And we're meeting with, I'm meeting with Dr. Scarlett and Miss Banks monthly to make sure that we're kind of talking about things that come up between now and July.
Okay. So in terms of staffing, I guess this is a question for the school personnel. Are you anticipating that you'll continue to use temps? Have you made any progress with hiring, permanent employees?
You know, that is a great and challenging question that we have really been dealing with over the past year. So right now we do have, I believe, 5 contracted staff in the district. One is potentially a temp to perm. So, you know, we're trying to make sure that we're hiring the appropriate staff that can really help lead some of this work. So it has been a challenge, but we're working on it.
Can I ask a question about the single audit? Alicia, maybe this is directed to you. So the issue, and maybe you answered this and I didn't hear it, but the issue with the lack of taking that inventory, was that a staff deficiency or just a lack of process, or can you elaborate on that?
Yes, so when management reviewed that finding, they noted that it was inadequate staffing. And a lot of this inventory is broken up between the individual schools. So it's quite a large undertaking, which is why they're considering their options on potentially bringing in outside help for it.
Okay, thank you.
Which isn't unusual and we recommend. I mean, if you have the budget to be able to use experts and consultants and spread out the tasks, that's good.
Thank you.
Hey, any more questions for the audit team? Okay, if there are none, what I'd like to do is if we have school board personnel and district executive staff on, would like to go into a closed session with the auditors. So I would entertain a motion to enter into a closed session to discuss communications with our auditors per Missouri statute 610-021 subsection 17. So can I get a motion to go into a closed session?
I move that we move into closed session.
Second.
Okay, so oh, Mr. Moss, are you still on? Because I will need to stay on. I don't want to get disconnected, so I'll need to. I don't know if I need to control it or if you can just leave this up.
So yes, sir, I can leave the room right now.
Okay, thank you. Thank you so much.
No problem.
Okay, looks like we're good. All right, so
I'm not sure. It still says we're live on YouTube.
oh. And I am not seeing, oh yes, I am seeing that. I am not sure how to contact him to. I was taken out of YouTube. I didn't think we were on.